The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we look at Monday's trade, the cattle futures found some good strength to start off the first full week of the month, while the grain trade kind of felt like it lacked a story, just drifted its way to the downside on Monday to start the week. Is weather and planting progress the biggest driver to the downside there of the grains? Let's talk about all of that. Joining us for a conversation, pleased to welcome him to the show. Scott Varlick with KKV Trading is with us. Scott, it is good to talk with you. Hope all is well out in Western Iowa.
Yeah, no, everything is great. Thanks for having me on the show. Certainly excited to be here. So another nice sunny day. Looks like we got a few of them coming together in a row here as well.
Absolutely. Well, maybe that's a good jumping off point for us, Scott. Looking at the grains, we just kind of drifted our way lower Monday, especially old crop, but even into the new crop contracts too on corn and beans. And, you look at planting progress, expecting that to really take another uptick here this week. And the weather forecast, it's a pretty wide open window for much of the central and western corn belt, it looks like, the next week to 10 days. And just got to feel like that kind of weighed on these markets here to start off the week.
Yeah, Jesse, and I think that's part of it. We've had planting progress. We had uncertainty early, but then it was just green light. Let's go. Let's get it planted. So, where I'm at, Northwest Iowa, we got it planted very timely, even before those last rains that came in. And it's already starting to pop up out of the ground. Looks good. But, our forecast moving forward, a couple of weeks of drier weather, it's pretty much open season. Anything that has not got planted, anybody that's behind, your window to catch up is here, and it's still plenty early enough in the year to kind of catch up on that. So that drier feel to it is probably going to help us with the planting, but moving forward, maybe that's what we continue to look at, is that drier potential forecast.
I'll have to wonder if it weighs on these markets a bit. If we start to do some chart damage, things of that nature, I would wonder here in the grains if some producers, they get done quickly. Maybe they start to turn their eye a little bit more back to marketing. And, from a risk management standpoint, I'm sure there's some things here that producers have to think about here in this window right now.
Yeah, it's gotten a little bit weaker than we expected probably, and it's catching us a little off guard. So we're being forced to kind of analyze what's driving the market, what risks do I have, and trying to look at some bushels to protect. All of that is coming into the picture. So biggest stories we have coming into today beyond what we just talked about would be, we've got looks like some fund pressure, some puking from the funds that are happening. What reason? Not real sure. We can maybe pinpoint quite a few things, but coming down on some of those support spots at 450 on the July corn is going to be a pretty important spot for it to hold, to see if we're going to have any more funds to further liquidate some positions. But as far as other stories you're going to start to analyze, you're looking at crude oil, talking about drilling a bunch more oil. So we've got maybe some negative news coming in the energy front. So the ethanol maybe has to be a little bit aware of that. And you think, well, what's the other main sector for some of these grains? It would be livestock usage. We've got low numbers in cattle, record low numbers cattle, tight numbers in hogs. We've all heard about the poultry issues this year. So just some of those long-term struggles possibly that are maybe adding to the down in the market right now, before we turn the page into what could happen through the growing season.
Absolutely. Well, let's talk livestock a little bit. That was a bright spot on Monday. Cattle futures I'm talking about here. And, cash cattle trade continues to be just so robust, Scott. I believe we were 5 to 6 higher in the South last week. I think $8 higher dressed in the North, if I remember right. You just look at this cash market, more records hitting here. And it just feels like cash continues to drive this cattle trade right now.
Yeah, Jesse, let's talk about cattle. Absolutely. That's one that's near and dear to my heart, but it has been cash leading the charge, and for lots of reasons. It's been a long ride to get to this point, as far as that tight supply standpoint. That's one of the main reasons we're here, is just because it's very small cow herd, and it was years of lacking profitability all the way down to the calf sector. Not enough dollars were making it down. So that was the fix. We just continued to liquidate that cow herd, making smaller numbers. And those issues of trying to grow a cow herd are still there. You got higher input costs. It's hard. Labor issues, real estate. I mean, you can go endless on the challenges of it. So we've just painted ourselves in a corner where these numbers are so tight and this cash is just exploding. We saw some 223 last week, and we have a lot of packers doing it. It feels like they're coming in from time to time and they try to just swing their arm and grab as many cattle as they can so they can try to sit on their hands for a little bit, and they're just not coming up with the numbers. They're not there. And where we saw some Monday trade as well, some of the steady 218 trade in the south, saw some 224 in the north here, dangling around on a Monday here in the morning, which is a little bit, not what we're used to seeing. So the supply has been, a major factor why we're here, but also couple that with good demand, Jesse. I mean, when we see what's going out the door at those kind of prices, that's pretty impressive there.
This is an interesting question that I've asked a few folks. I'll ask you, Scott. At these lofty levels, is it tougher for a producer to make a profit here in some cases or not?
I would say it's still tough. I mean, it always is in the cattle industry. We're used to working with small margins anyway. So, I mean, that's a risk we take. Cattle guys have had to be good marketers. We have to, because we don't always get bailed out, and there's just too much money at risk for a small amount of profit. So, and you're still seeing, when you see these feeder calf prices, as high as they are, that's been a challenge. Okay, I need to really analyze my marketing program, and we need to capitalize on every dollar we can on the upside, because we'll go through years of struggled profits. And we need to make sure that we're going to hit this one out of the park, because this is our chance to really make it. So that's the challenge. You make as much as you can, with a lot of dollars tied up, and it's hard to do. So, some of the dollars have told us, hey, we need to make these things bigger, make them bigger. So we've done that. We've got cheap feed, and we've got $2.23 fat trade, and we can put it on, put the pounds on a lot cheaper than that. So for one, let's make them bigger, because what I'm trying to replace them with, these feeder calves, are pretty high priced. I'll just keep feeding what I have. We're seeing a lot of that, but we're all a little bit nervous, I guess, to make it short. I think the bulls are scared. The bears are scared. We all know how high this thing is, how we respect it, and trying to navigate that as safely as possible.
I was going to say, what's the old saying? It's like a beach ball underwater, or a market that can't go down, won't go down. And it just seems like that has been this cattle market for some time now. And to your point, it seems like everyone is respecting it, maybe a little scared of it, and just kind of letting this thing, kind of riding this thing out, I guess is how I would put it.
Yeah. I mean, trying to be hedged in a market like this is you're going to become close friends with your margin clerk. So it's been a kind of market is, tough to try to stay with some protection on, but so we've had to get a little bit cute in some of those aspects, but liking the direction we see. I mean, the trend is still up. We've got a very strong basis. We've got the bull spreads are working and the market's up. Those are the three major points to decide what trend you're on, and the trend is still up. And even with our large weights and getting that, production level to even with year ago levels, making up for some of those less numbers, still at these prices, I think that's where we lean on demand and say it's just very impressive. And we haven't had any hiccups along the way to speak of in demand as of yet. We're just getting to some of these higher prices. So interesting to see if we can maintain this kind of uptrend. But as of now, hasn't been any major hiccups yet.
Scott, awesome stuff. If folks want to reach out for a conversation with you and the crew there at Coima & Varilek, what's the best way to do that?
Yeah, give us a call or check out our website, kkvtrading.com.
Scott Varilek with Coima Varilek there at Sioux Center, Iowa. Good to talk with you, and appreciate the time. Look forward to chatting with you again real soon here on Market Talk. Thanks so much.
Yeah, thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.